So how's the market doing? Well, what I've done today is I've put together the quarter three numbers for 2023, looking at three counties, sales between $1 and $100 million, and assembled them into the deck that I'm about to walk you through. And I will narrate what we're seeing in the market and what's happening. But I hope you find this informative. And if you do, please subscribe to our channel and click the notification bell. It helps us to continue to put out great content like this for you to enjoy. So let's go take a look. Okay, so let's take a look at our Q3 2023 Greater Boston Sales Trends analysis and get a sense of how the market's actually performing. So the first thing is just getting our bearings around where we are. We're looking at the $1 to $100 million market for retail, office, and industrial sales in Middlesex, Essex, and Rockingham counties. So these are primarily suburban markets west and north of Boston, which make up part of the Boston MSA. And so the data that we're pulling goes back to 2006. We like to track the data so we can see the overall health of the market in the market cycle. And what you can see here is the long-term average going back to 2006 is 454 sales per year between $1 and $100 million in these three counties. This year, 2023, we've seen 328 deals trade, and we're on track at this pace to close 457 sales this year. That's in line with our 2014-2015 volume, which was the beginning of the expansion phase, so the end of recovery, beginning of expansion in the market. But it's also a very close number to 2006, which was the volume that we saw just before we went into the end of 2007 with the financial crisis. And then 8 and 9, you can see we saw a big drop off in sales velocity. So this is 2023 is a pivotal year in terms of figuring out where we're going to go. Are we going to kind of maintain at a long-term average rate of transactions, or is something else going to happen in the economy? If we had some negative GDP reports come out and some recessionary news hit, we may see some softening and could see some further slowdown in sales volume. If that doesn't happen and we're in quote unquote a soft landing environment, then I think we're likely to stay at this average transaction level here in 2024. Now, the effective change year over year, not surprising that we're seeing a deceleration. We've seen a year over year change of about negative 35%. From 22 to 23 in volume. So just a slowdown happening, and this is predominantly due to the Federal Reserve raising interest rates at the highest pace in U.S. history. The 10-year Treasury, which we track as a kind of a safe rate investment for comparison to how the commercial real estate market's performing, year to date has averaged 3.8%. And you can see here that there's been a run-up in the 10-year from 2020 up to today. Pretty rapid rise. We were at 0.9% in 2020. We've gone to 3.8% here year-to-date in 2023. The last time we saw these rates was back around 2005, 2006 on the 10-year Treasury. The 10-year Treasury then came down as monetary policy eased, and we saw interest rates come down as the Federal Reserve tried to stimulate the economy to help us recover from the Great Recession. So right now, they're trying to stem inflation, crush inflation, or quote-unquote break the back of inflation. And by raising rates as rapidly as they have, they've certainly slowed down the commercial real estate market. But the annual change is slowing. On the 10-year Treasury, it's starting to slow down, and this is giving us an indication that we might be starting to reach the kind of the peak or near peak of where the 10-year is going to settle. in the next year or so. So I'm not expecting to see a dramatic increase in the 10-year going into 2024, which gives us the sense that the market may be beginning to show signs of stabilization. So going back 06 to 22, some context, historical context, annual transactions, 444 average volume about $2.8 billion. Year-to-date 2023, we've had 328 transactions, 1.5 billion in volume. It's kind of a low volume number by dollars, and one of the reasons for that is the number of transactions that are happening are smaller. We've seen the average and median deal sizes shrink as more transactions in that sub $10 million market have been occurring, and so the pricing on an average price per square foot is also reflecting some of those characteristics. So it's sort of interesting. I'm going to break out the retail, office, and industrial markets and talk a little bit about what's going on an average price per square foot in just a minute. Nationally, Green Street in their commercial property price index has recently updated their index, and you can see here where it says 129.5, starting to show signs of maybe leveling a little bit. The last time I shot this market update, this number was at negative 13% for price index. Okay, so for the price index, so we saw a correction of about 13% nationally. And that's covering retail, office, apartment, healthcare, industrial, lodging, net lease, self-storage, manufactured home, student housing. Okay, so those are all rolled up into this index. Nationally, we're down about 11% from the peak. The market sentiment has been improving. This CREPI composite index is showing us that we have, in fact, kind of coming off of a trough at the end of 2022, early 23, when market sentiment was pretty dismal. And if you look back at these turns in the market, the low points, they coincide with recessionary periods in the market, and the high points are during points of expansion and peak hypersupply activity. So we're now starting to see some sentiment improving, and this may be some of that soft landing sentiment that's coming into the market and finding its way through. So what's going on with retail? Well, retail has been one of the more active, probably actually the most active group of these asset classes. This year we've had 173 transactions, and we're on trend to 241. So this is going to make up about half of the overall transactions this year, retail. And you'll see here that we're trending to our third busiest year by sales volume in retail, only behind 22 and 21. So pretty busy year. So retail is definitely a strong performer. We've got very high occupancy rates in that market, and our forecast coming into 24, we're expecting to see that continue. The health of the market, continue into 24. There may be a little bit of softening in fundamentals, but likely not much, given the fact that we're not overbuilt or over-retailed in this market. Now, industrial. Industrial has actually slowed down quite a bit in terms of volume or number of buildings sold. Year to date, we're at 65 sales. Annualized, we're headed to about 91, which puts us right around that 2015 time frame. So that it was right around 2015, 2016 when that industrial market really started to catch an updraft and get really start to pick up. And you can see 21 and 22 in terms of volume, it really is very active. So why is this market slower right now? Well, a couple of reasons for that. There's been a pullback on the institutional side, and that's starting to loosen up a little bit, but the pullback on the institutional side has been, targeting these assets not quite as actively. And then you've got smaller deals by dollar value that are trading but larger buildings, that are happening. So we're actually seeing the average pricing per foot adjust downward, and that's really tied to the data that's that's available in the market. The building sizes that are trading, they tend to be in secondary and tertiary locations in these counties, and they also are sometimes older and less be assets. So the forecast going into 24, we're expecting the industrial market to continue to be operated at its peak level, with very, very good fundamentals, high occupancy, stable rent. Not expecting to see a lot of growth or inflation in rent in the industrial market, but we're expecting it to maintain into 24 its level of activity. Now the office market, not surprised to see this slowdown. 2023, we've got 61 sales year to date. We have 85 we're annualizing to. These levels we saw back in 2011, 2012. CoStar just reported that the 100 million plus market is on track to hit the 2010 transaction levels. So not surprising here to see office volume down. But what's interesting is the average price per square foot is up. And the reason for this in the data is that we have a disparity. We've got 5 or 6 deals that were traded that were really lab biotech deals at pricing at $600 to $1,000 per square foot. So outliers, not really your typical suburban office product. The other portion of the market is the small office product in the suburbs, 1,000 to 3,000 square foot buildings that are in highly sought after market locations that are trading at high prices per square foot, as companies that are servicing local geographies are buying up some of these properties for their, to house their businesses locally. So, demand on the small end of the market is high, but that stock suburban office product with 20 to 40,000 square foot floor plates, these 2 to 4 story buildings, very soft. Okay, very soft there. So if you are looking to figure out what the office market is doing in 2024, not likely to be very exciting. We're at the lowest point in the market cycle and expect to be there for a good part of next year, at least the whole year. But there are some areas of the office market that have good activity, good fundamentals, and growth, but you have to really, you got to be picky about what you're looking at. So if you're in a situation where you're trying to figure out what the right next thing to do with your property is, and you'd like to have a conversation about what the market looks like for your specific situation, maybe you're unsure about if now is the right time to sell your property. If you were to go to market, what might happen? What kind of pricing might you see? Or you might be in a situation where you're looking to retire out of your property and want to reinvest your money somewhere else. Happy to have a conversation. You can reach out to us on our website, mansardcre.com. The top right corner of the website, you'll see a button, request a consultation. You can go there and fill out a form. We'll connect, and the conversation we'll have, essentially we're just going to ask each other a lot of questions. Want to know everything we can about your property and your personal financial goals, so that we can develop an evaluation, a strategy for you to then take you through the decision whether now's the right time to do something with your property or whether it's the right time to do nothing with your property. Either way, we want to help you have a financially meaningful life event with your investment in real estate, so that at the end of that conversation or that decision, you are confident in what you've chosen to do and you can relax and celebrate. So again, at mansardcre.com, you can go to the request a consultation button, or if you just want to call us, our number is 617-674-2043. Either I will follow up with you or a member of our team, and we'll start with just a conversation about where you are and what you're looking to do. Thanks for watching.